and why they are buzzing on the back of news flow or in the back of technicals. Next stock that is in focus today, and that is Ingenious India. That saw a decline of almost 1% in trade on the back of its Q1 results. Now, the company the company reported a decline coming in after a 28% fall in consolidated net profit at 65 crore rupees on a year-on-year basis, while the revenue increased at 39% in a revenue of operations was that stood at 870 crore rupees in Q1 of FY26. Now, on the segmental front, revenue from consultancy and engineering projects was at 421 crores. That was up 17% on a year-on-year basis, and the revenue from the trunky projects was at 449 crores. That was up 70% on a year-on-year basis. On the back of its results, Ingenious India is getting hammered in trade today with cuts of more than 4.5%.
Indeed, Ingenious India, that one is down over 4.5% as we speak after reporting its numbers. But let's also put the spotlight on the banking sector then, and ICICI Bank in particular is in focus because the bank has now reversed the steep minimum balance charges or minimum average balance hike after they received feedback for customers. So now minimum average balance for urban areas now stands at 15,000 versus 50,000 that the bank had announced a few days ago. Minimum account balance has been revised to 15,000 for metro and urban areas, 7,500 for semi-urban areas, and 2,500 for rural areas. So this revision has come in after the announcement came in last week from the bank, where they had revised minimum account balance upwards for saving banks account, but some respite coming in for customers. The stock, of course, is up 0.5% in trade on the back of that.
All right, so that's ICICI Bank gaining 0.5% in trade. Ravinder, you have picked out Texmaco Rail for us. Let me come to you. Another earnings candidate, lot of earnings coming in. Take us through what does the report card for Texmaco look like?
Well, as Texmaco reported a weak set of number in the quarter gone by, where company's revenue saw a downtick of 16% year-on-year basis at 911 crore as compared to 1088 crore. And if we talk about EBITDA, then EBITDA also saw a downtick of 33% year-on-year basis, and margins saw a contraction from 10% to 8%. And for the and company said that the order book stands at 7,053 crore as of June 30, 2025, and the temporary supply chain disruption impacting the railway sector. They say that the short supply of wagon wheel set from the Indian Railway issue has been resolved, and the company delivered 1,815 freight cars and 8,667 metric ton from their foundry division. So back of the weak set of number from the Texmaco Rail, stock is in focus.
Okay, so Texmaco Rail in focus after it reported very weak set of numbers, but we also spoke to the management. Sudipta Mukherjee, Managing Director of Texmaco Rail, says that the core business of freight cars will continue to do well going forward as well. Let's go across and listen into what he had to say.
You can expect a better bottom line from Texmaco in this financial year. This 1 quarter or 2 quarter performance is not going to make us put us away from whatever we are striving for. In Texmaco, we have multiple businesses which is growing and in the right trajectory. One is the core business of freight car. It will continue to do well irrespective of these small scratches, and we are confident to make up. Our foundry component division will do well. Our all these segments are growing proportionately and significantly. Initially, you used to see that we had an order book of the freight rolling stock, which is the 80% contributor of the top line of the company. Now it is around 51%, and the balance is from the other part of the businesses. So this is a very healthy scenario in terms of de-risking and also keeping the momentum of the growth.
Okay, so that's the word coming in from the management of Texmaco Rail on what the outlook is going forward. But on the technical side, we are also now joined by Sneha Seth, derivative analyst at Angel One. Sneha, afternoon, and thanks so much for joining us today. We were just talking about ICICI Bank a couple of minutes ago, and that they've gone ahead and revised their minimum account balance for across regions. But on the technicals, if you can tell us, where do you see the stock headed from the current levels?
If you look at the chart structure for ICICI Bank, we have seen some consolidation. It's been like from the April series, second half of the April series, we have been seeing this counter trading in a range of 1390 on the lower side. On the higher side, 1500 is the resistance zone. So this has been the range. But interestingly, if you see the daily chart, we are seeing this counter taking support near the 89 EMA, which also coincides with the rising trendline support zone. And today we have also seen decent writing in 1420 put strikes. So the overall development is quite good. And I believe the banking index has been consolidating recently. And any up move in banking index above, say, 55, 600, 700 zone, that would be very interesting. And these counter which are trading near the support zone may show a very strong respite. So I think ICICI Bank would be the pick from the private sector space. Keep a stop loss say around 1400 or so, and one can expect a target at least towards 1470 to 1480 is the zone which I'm looking forward.
Right, so that is ICICI Bank on the charts for a tech check. But let's move on to the next candidate, an earnings candidate here, Shilpa Medicare, that's in focus. The numbers, as far as the numbers are concerned, we do see a profit uptick coming in at 46 crores on a year-on-year basis versus 14 crores. And we do see the revenue also that is seeing an uptick of 9.9% on a year-on-year basis at 321 crores. The EBITDA is up 25% on a year-on-year basis at 91 crores, and the margins are also seeing an expansion at 28.5% versus 25% on a year-on-year basis. In the back of decent set of results coming in from Shilpa Medicare, we do see that it has given up those morning gains, but nonetheless it is trading in the green with gains of 0.3%.
Okay, so that's Shilpa Medicare for you. The stock is up 0.3% as we speak. But let's also put the spotlight in Jubilant Foodworks then. Ravinder, this company reported its numbers yesterday. Tell us, how were they?
Well, as Jubilant Foodworks reported a Q1 number, and company reported a mixed set of number, where company's revenue was up by 17% year-on-year basis. And if we talk about net profit, then company's net profit has jumped from 56 crore to 92 crore, and EBITDA saw an uptick of approx 4% year-on-year basis. And the management said that they don't expect any pricing action in the near term, and they have planned to add 250 Domino's India and 3 Popeyes store in the FY26, and the long-term expansion target is 5,000 outlet. Management said that they remain focused on gross margin expansion over the time. So HSBC has also come out with a note, and they have upgraded the stock to hold from reduced rating, and high target was rupees 650 as compared to earlier target price rupees 600. So back of the mixed set of number and the upgrade from the brokerages, Jubilant Foodworks is in focus.
All right, Jubilant Foodworks is in focus on the back of that. But Kanishka, let me come to you for ONGC. Now, ONGC was an earnings candidate. Today, the brokerages have come out on ONGC. Tell us, what is the take for brokerages on ONGC then?
Absolutely. So ONGC with a largely inline set of Q1 numbers, but now brokerages have come out with estimates, and they have cited production guidance cut as a key red flag. Now, Nuvama maintains a reduced call with a target price of 225 rupees, noting that FY26 and 27 production guidance cuts, the bearish crude outlook and muted production growth. These are the factors that it has pointed out, and for its reduced call, it also sees some boost from higher priced new well gas and better subsidiary performance, but only marginally has raised its FY26 and 27 EBITDA estimates by 2% and 1% for both of the years. Motilal Oswal, meanwhile, has downgraded the stock to neutral, cut the target price to 230 rupees from 239 earlier, citing weak volume growth, muted oil price outlook, and risk from high OPEC plus spare capacity. So that's the reason why this stock is in focus, currently trading about 0.6% higher, lower.
So that's ONGC for you, down 0.7% as we speak. But let's also put the spotlight on IT major Infosys then, and it has announced a joint venture. This is with Telstra in Australia. In fact, Infosys also says that this is for accelerating AI-powered cloud and digital transformation for Australian enterprises. Infosys will hold about 75% stake of the shareholding in Versent Group and a wholly owned subsidiary of Telstra. So this Versent Group has a wholly owned subsidiary, Telstra Group, that will deliver cloud and digital transformation transformation services. Infosys will have operational control, and Telstra will continue to hold the minority 25% stake in the company. So some expansion plans coming in for the company, where they will be now giving AI related services in Australia as well. So on the back of this positive news flow that has come in, the stock is sitting with gains in excess of 1.5% in trade today.
All right, so that is that is Infosys in focus on the back of that news flow. But Sneha, you've also picked out Infosys on the charts. What does the chart structure for Infosys show to you?
If we look at the overall IT pack, I think the IT index has corrected, and we are seeing some consolidation. In fact, recently, if you look at the chart structure, the IT index has been precisely taking support near the 61.8% retracement on the daily chart structure. And looking at the stocks like Infosys, TCS, these counter are also showing some strength now. So talking about Infosys, I believe today we are seeing some fresh buying interest coming in. In fact, this counter recently, any counter, if it corrects and then we see some consolidation, and which is followed by some buying interest, it is said to be positive. And the option data also looks very appealing in this counter. So I believe someone who wants to go ahead and long can keep a strict stop loss around 1400 zone and go long in this counter. Upside potential target would be around 1540, 1550 is the level which I'm watching for. And in fact, once we see a move above this, the possibility of 1600, 1650 is very much likely. So from here on, risk reward ratio is very good. So someone who looks to, someone who's looking forward for adding a fresh long position for a medium to long term perspective, even they can pick Infosys for now.
All right, so that's what it looks like on the charts. But let's move on to the next counter, which is in focus on the back of its Q1 results, and that is ITI. That is in focus. Now let's look at the numbers then. As far as the loss is concerned, the loss has narrowed on a year-on-year basis. The loss stands at 63 crores versus a loss of 91 crores on a year-on-year basis. The revenue stands at 498 crores. That's down 4.2% from 520 crores on a year-on-year basis. And the accounts EBITDA is also seeing a loss of 7.4 crores versus an EBITDA of 12.7 crores on a year-on-year basis. So on the back of poor set of results coming in for ITI, the stock is down and out almost 3.5% in trade.
Okay, so that's ITI for you. The stock is down 3.5%, but let's also put the spotlight on IRCTC. Rabinder, how were the numbers yesterday?
IRCTC has announced their Q1 number yesterday after market hours, and company's revenue was up approx 4% year-on-year basis from 1,118 crore to 1,160 crore. And if we talk about net profit, then net profit also saw an uptick of 7.5% year-on-year basis at 330 crore. And if we talk about EBITDA, then EBITDA also was up by 16% year-on-year basis from 375 crore to 397 crore. And margins also saw an uptick of more than 70 basis point year-on-year basis. So back of the good set of number, IRCTC is in focus.
All right, moving on then to the next counter, that is IRCTC on the back of its results. Sneha, coming to you then. Ashok Leyland, you picked out from the auto pack. Tell us on the charts, Ashok Leyland, how does that look like to you? Because just today it is seeing an uptick of more than 1% in trade. It has done decently well. In fact, Ashok Leyland is one of the strong counters from the auto pack. On the chart structure, what does it look like to you?
If we look at the overall chart structure, we are seeing higher top, higher bottom structure forming over here. The counter has taken support near the previous swing lows, which is placed around 114, 115 zone. And after that, we are seeing slowly and steadily this counter is, adding some fresh buying interest. In fact, it has even managed to surpass the 20 DEMA on the daily chart today. Though from the higher levels, we have seen some profit taking. But I believe someone who's looking to add any fresh position, one can go long with a strict stop loss of around 117. Upside potential target would be around 125, 127 would be the target for this counter. And once we see this counter surpassing 127 zone, we expect a very sharp momentum coming in this counter, which can bring it above the record highs even. So at this point in time, the chart structure is quite good. Someone who wants to go ahead and add any fresh longs can go ahead and add this counter as well.
So, fresh buy call coming in for Ashok Leyland, but let's also put the spotlight on Aditya Birla Fashion and Retail then. Kanishka, what is the news flow here?
That's right. So ABFRL reported its numbers yesterday. The Q1 revenue came in at 1,830 crore rupees, up about 9.5% on a year-on-year basis. EBITDA that rose 24.6% to 111 crore rupees. Margins they also improved to 6.1%. However, losses they widened to 212 crore rupees. So that's the earnings fine print. But apart from that, its subsidiary, ABFRL's subsidiary, Aditya Birla Digital Fashion Venture, that has also signed agreements with ServiceNow Ventures Holdings for an investment of up to 437 crore rupees via compulsory convertible preference shares. This is aimed at boosting its digital fashion initiatives, and that's why the stock is in focus, currently trading about 0.8% higher.
Right, so that's ABFRL on the back of its earnings coming in there. But let's move on to the next one. Ashisha, you picked out Max Health for us. Tell us what do the numbers look like for Max Health?
Well, yes, in fact, it has reported weaker than expected set of numbers, and that is precisely the reason the stock is sitting with a cut of nearly 4% as we speak. But when we look at the numbers on a year-on-year basis, revenue has risen by about 27%. Margins have contracted. They've come in at 24.9% versus 25.8% that the company had reported same time last year. Now, as far as EBITDA per bed is concerned, that came in at about 68.5 lakhs. Which is a decline on a sequential and on a year-on-year basis. Meanwhile, net debt stood at about 1755 odd crores compared to 1576 crores that the company had reported at the end of the previous quarter. So net debt has risen, and the management will also in fact go across and listen into what the management had to say. Abhay Soy, Chairman and Managing Director at Max Healthcare Institute, shares that they are comfortable at the current debt level and they expect a break-even very soon. Let's go across and listen in.
We also have about 900 plus crores of cash sitting. So if you look at it from a net debt standpoint, I think presently we are 0.7 times net debt to EBITDA, which is well below our internal threshold of 2.5 times debt to EBITDA. So given our EBITDA growth as well as our EBITDA translation to free cash flows, which this quarter was about 65%. We are, I think, more than comfortable sort of funding our growth and, keeping these level of debt. So I don't foresee any refinancing, so to say. Well, break-even will be a matter of weeks, in fact, because it's a brownfield. So I'm not very concerned about that.
All right, moving on then, Sneha, coming to you, you picked out United Spirits for us, again a counter that is up and away 1% in trade. This counter hasn't really done much in the last 6 odd months. So from here on, what do you see on the charts for United Spirits?
Say, if we look at the chart structure, we have seen decent profit taking. There is one support zone which is placed around 1270, 1265 zone, and someone who's looking to add a contra bat, I think this counter would be interesting because the risk reward ratio is quite favorable at this point in time. The counter has been consolidating in last couple of sessions, and today finally we are seeing some buying interest coming in, when the counter has even managed to surpass the 20 DEM on the daily chart. So I believe any follow-up buying above 1350 would be interesting for this counter. So it's a conditional buy, wherein if the counter manages to surpass 1350 zone on the closing basis, one can go ahead and long this counter, expecting a target of 1400, 1420 is the level which I'm watching for. So it's a conditional buy, wherein if the counter surpasses 1350, it would be a buy, and the stop loss can be maintained around 1300 in that.
Okay, so that's United Spirits for you. But let's also put the spotlight on Zydus Life Sciences then. Kanishka, why have you picked up this counter?
That's right. So Zydus Life Sciences is in focus after the US FDA has completed 2 inspections at its plants. Now, at the Baddi facility in Himachal, a surveillance inspection from August 4 to 13th ended with 4 observations, none related to data integrity, however. The company said that it will address them promptly. Other than that, the pre-approval and CGMP inspection at its SEZ2 Ahmedabad plant conducted between August 11th and 13th concluded with 0 observations, signaling full compliance. So that's why the stock is in focus, currently trading about 0.1% higher.
So that's Zydus Life Sciences for you, but let's also put the spotlight on Tata Group stocks, and the entire group of stocks will be in focus today because Tata Group will also be conducting their AGM today. Tata Sons AGM is scheduled to happen today, where Tata Sons shareholders are set to clarify or ratify Noel Tata as the director of Tata Sons at the AGM today. AGM will also assess Tata Sons' progress on seeking RBI waiver from listing. And Noel Tata, remember, was named as the chairperson of Tata Sons Trust October 11. That was 2 days after Ratan Tata's demise last year. The meeting will also discuss options for SP Group's exit from Tata Sons as a shareholder. So several developments taking place, and the entire sector will be in focus on the back of some news that could probably come in over the next few days.
All right, with that, we're completely out of time on this edition. So, Rabinder, Kanishka and Sneha, thank you so much for taking the time out and joining us for Fatafat and giving us all the top buzzers in trade. But let's move on to a news that's coming in. The government is considering a second production-linked incentive scheme for the textile sector, set to be marred by the US tariffs. Now, the draft of PLI schemes will be ready in almost 6 months. My colleague Sameer Dikshit is joining in with the details.
Important development for the textile sector. What we are picking up from our sources that government is planning to soon come up with a additional PLI scheme for the textile space, and this PLI scheme or the production linked incentive scheme will be for the garment sector, for the garment players. So as of now, if you see the PLI scheme, it is there for the textile industry, but it is for the MMF, the man-made fiber and the technical textile. But there has been a long pending demand from the industry for the for rolling out of a PLI scheme for the garment space as well. And recently, seeking the global trade situation and also the higher tariffs which are being imposed from America, the government plans to not just protect the domestic industry but also to give them an additional push to expand their export baskets, to further push their export space as well. And in the same direction, the government is planning to come up with a PLI scheme for the garment space, and this scheme will be to the tune of roughly around rupees 4,000 crore that will be rolled out for 5 years. Maybe in next 4 to 6 months, the draft will be circulated for further discussion, and then the government plans to roll out from the next financial year. But this will be an important push for the domestic industry who are there in the garment space, and this will give them incentives to not just scale up their production but also to enhance their export basket as well.
All right, thanks Amir for joining us with all those details. But shifting focus then, and in a major push to manufacturing sector, the government has also proposed a PLI scheme for electrical power cables. Prakash Priyadarshi, my colleague, is now joining us with more details on this. Prakash, take it away.
Well, that's an important development coming in as we are learning that the government has initiated an inter-ministerial consultation on a manufacturing scheme for electrical power cables, a very significant development coming in. In fact, a proposal has been prepared by the Power Ministry for a PLI scheme. The government intends to provide financial incentives to companies based on their manufacturing capacity for initial 6 years. Sources tell us that the consultation with the industry has been completed, and Central Electricity Authority, that is CEA, has prepared a proposal for a new scheme where manufacturing of overhead and underground transmission cables will be part of this scheme. In fact, Power Ministry is planning for massive expansion of underground cabling, and therefore this proposal has been prepared. Sources tell us that the overall financial outlay under this scheme could be around rupees 6,000 to 8,000 crore. This is part of the government's overall effort to become, Atmanirbhar when it comes to power equipment, manufacturing of power equipment. The process has been initiated, and the final proposal will be sent to the empowered group of secretaries on PLI for its consideration.
And well, a massive cloudburst has hit Jammu and Kashmir's Kishtwar district. There is a fear of casualties. The official confirmation is awaited. Meanwhile, rescue team has left for the site. Times Network Sahil joins us with more updates on that.
A sudden cloudburst has occurred in Chasoti village of Kishtwar district in Jammu. There are reports of casualties and many individuals are trapped. The village is en route to Machil Yatra. There are reports that several people have in fact lost their lives in this particular incident. Union Minister Jitendra Singh has directed civil administration in Kishtwar to intensify rescue operations, while as Jammu and Kashmir LG Manoj Sinha has in fact issued similar instructions to the authorities in the district. As of now, the district administration in Kishtwar has in fact started a rescue operation. Disaster management units, police, CRPF and other in fact SDRF units are moving to the spot for a quick rescue operation. But yes, there are reports of casualties, there are reports of many people in fact feared, trapped. As of now, situation remains in fact tense, and the district administration is continuously monitoring the situation and at the same time have initiated a rescue operation.
All right, thanks so much for joining us with all those details. But in the meanwhile, let's also put the spotlight on what the markets are doing. And Nifty is absolutely flat at the moment, just holding on to some marginal amount of gains near that 24,621 mark. We have Nifty Bank though, which is outperforming in trade today. Nifty Bank should also come up for you on your screens. That one is up nearly 0.25% above that 55,300 mark. In terms of individual stocks, Wipro is the biggest gainer. In fact, not just Wipro, several of these IT stocks continue to gain in trade. Wipro, Infosys and several other IT stocks as well. Meanwhile, Eternal is up 2%. We have HDFC Life, that one is also up 1.5%. Alright, so we also had IOCL numbers flash for you on your screens, where profit after tax has declined by about 21% on a sequential basis. Margins, meanwhile, have come in at 6.5% versus 7% that the company had reported in the previous quarter. The stock is sitting with a cut of nearly 1.5% today. But that's all the time we have on this edition of the show. Don't go anywhere. Closing trades comes up next.